What's up, people? Hope all is well with you. Kenneth here with StreamHomeLoan.com and 100 Years of Wealth. Just dropping off some information for you guys. Hopefully you could benefit from it or share it with someone that might be able to benefit from it. So as you all know, or you may not know, I am a mortgage broker as well as a realtor. So my company is StreamHomeLoan.com. And the main focus of that channel is going to be really just providing information to help expand the knowledge for mortgage, for potential home buyers or people that might need to refinance, or just people that need to gain information on that side, as well as people that might be interested in entering this line of work. Because I do think it's a place where, you know, if you want it, you can make it happen. So this quick video is just going to be to help people understand how to purchase a home with zero down. You know, there's always videos out there where it seems like a big mystery and you got to sign up for this course and I'll show you how to do it, and you know, pay this amount and I'll show you how to buy zero down and you could be a great investor and this and that, but you got to sign up for this course and pay this fee. You know what? Hey, more power to those guys. Maybe they're providing some sort of information and giving someone some direction that'll help them move in the right way towards their goals. So I don't know, but a lot of times it seems like it's a lot of smoke and mirrors to sell you some information or sell you a product when the information is actually out there for free. So I'm going to quickly give you a small tidbit and small piece of information on how you can buy a house with 0% or zero down. So there are actual loan programs out there where a lender will give you 100% of the purchase price of the property in one loan. Most of those loans are going to be income driven, meaning that they want you to fall under a certain like median average income in order to qualify for that type of special financing, where they're going to give you 100% of the purchase price. In the past, there was more loans that just gave you 100%, cover if the property was $400,000, they gave you a $400,000 loan, you paid your closing costs or possibly got a credit for closing costs from the seller, or possibly your loan offers some sort of credit towards closing costs. But for the most part, the loan would cover 100% of the purchase price, and then you would be responsible for taking care of the closing costs out of your pocket. And in a different video, I can explain how closing costs work, what closing costs are, and what you can expect as an amount for closing costs on a real estate purchase transaction or even a refinance transaction. But back to the point of the story. So there used to be more loans that would give you 100% financing options. They are out there still. They are rare, and they usually gear towards a scenario for people that have lower income. So if you fall into a scenario where maybe you think you might fall into that median income requirement, then I would say reach out to me if you have any questions, and we can do a little further research to see if you fit into that category for your specific area, or reach out to a local loan officer or bank in your area and see if those options might be available for you. Some people are like, yeah, there's no way that I'm going to fit into a quote unquote lower income scenario. How can I qualify for 100% financing? The way it works, this is not for every scenario, but this is the way that I've helped clients in the last year with 100% financing. So let's take FHA as a requirement, right? Or sorry, as an investor. FHA requires you to put down 3.5% as a down payment. So just for simplicity purposes, if you had a $100,000 purchase price and you're going to finance with FHA, 96.5%, that means your loan amount is going to be $96,500, and your down payment requirement is going to be 3.5%. So there are programs out there that will directly give you that 3.5% in the form of what they consider a silent second mortgage, meaning that they'll give you the money up front, and then they're going to put a second on your property, basically a lien against your property that you pay off later on when you refinance your home, or if you ever sell the property. You obviously can pay it off on your own as well, but most people will use those funds to get into the property and pay it off later on when they refinance or if they sell the property. So that is a mechanism to where you can get the 96.5% on the first mortgage from the lender. That's going to be your loan. That's what you're going to make your monthly payment on. And then on the back end, you're able to get the DPA, down payment assistance, and that's going to come in the form of the silent second mortgage, meaning you're not making any payments on it. It's just sitting on the property. So some of those silent second mortgages can be 3%, and they require you to come out with your own 0.5% because they want to see some sort of investment from yourself. And then some of them will actually give you the 3.5%, and literally cover that full space, that create that whole 100% finance. Those are readily available. They don't require some extraordinary credit score. From what I've seen, the minimum credit score requirement is usually going to be 620, or for some programs 640. So these programs are not requiring you to have stellar credit. They usually want your debt to income ratio to be below 50%, sometimes 45%, meaning that if you, for simple numbers, if you make $10,000, they want all your expenses and your mortgage expense with taxes and insurance to be less than 50% of your income. So if you made $10,000 a month, 50% would be, or $5,000 would represent 50%. And some lenders are going to want you to have it lower than that at $4,500 a month, representing 45% debt to income ratio. So with those down payment assistance programs, there are even some that will give you another additional loan that will go onto the property's title for your closing costs. So I've done scenarios in this last year where we got 3% for the down payment as well as 3% for closing expenses. and it left it to where the client really didn't have to come out of their pocket, maybe a very small amount for like a difference in closing costs or prepaid taxes and insurance. But I did multiple transactions like that over the last year where clients were really able to get into the property with really minimal out of pocket, down payment covered, closing costs covered as well. Some of those second mortgages or silent second mortgages are what they consider ZIP, Z-I-P, zero interest program, where you're not even accruing interest over that time. They give it to you. The counter to that and the caveat is that on your first mortgage, you're usually going to have a slightly higher interest rate if you're using a down payment assistance program, because that's the way the lender makes a little money. They're saying, okay, hey, we're going to give you this free, or not free, we're going to give you this down payment assistance, but on the first mortgage, we're going to charge a little bit of a higher interest rate. Therefore, it accounts for their risk and it makes it to where it's a smart transaction for them. So those programs are available. Like I said, they're not looking for stellar credit. They're just looking for your normal average credit. They're looking for your income to be normal and average in comparison to your debt. And they're fairly easy to get into. They're not like grants and things like that, where these grants come out with a certain amount of money at the start of the year and then they run out at a certain point. These programs are fairly readily available. I did see some of them back off during COVID, but they've seemed to come back and still be active in the market. And a lot of times it's just people that look for them use them. A lot of people just don't look for them because they already have their funds set aside for their down payment. Therefore, they don't end up using those down payment assistance programs, or they say, hey, you know what, I'd rather not take the slightly higher interest rate on my first mortgage, and I'll just put my own funds down because I already have the funds set aside for it. So give or take, for some people it makes more sense just to put their own funds down. For others that could really could really benefit from keeping that money in their pocket, it makes sense for them to go ahead and take advantage of the down payment assistance. So I would say if you have any questions about that specifically, reach out to me directly and I can answer them. And this is something that you can't use down payment assistance programs if you're buying an investment property. But if you bought a property using a down payment assistance program, lender traditionally is looking for you to be in that property for at least a year if you're buying it as a primary residence before you would do anything like renting it out. But maybe you have a 1-year plan, live in the property, rent it out a year later. That's a way to start acquiring investment properties. But always, be aware of the guidelines and understand that the lender, if they're giving you all these perks as a first-time home buyer, they're expecting you to actually live in the property. Not forever, but at least 1 year is usually the requirement or the understanding when they're giving you these down payment assistance programs. So keep that in mind, pass it on to someone that might be interested in buying right now, that might be looking to take advantage of a down payment assistance program. If anyone has any questions, shoot me a message in my DM. Have an excellent day. I hope I brought some value with this information. Thank you. Like, subscribe, please, and I'll check back.